Hello everybody and welcome to another episode of BullionStar Perspectives. My name is Ronan Manley and today we're delighted to sit down and talk to Sean Fieler. Sean is the owner and the Chief Investment Officer of Equinox Partners in Stamford, Connecticut. Sean, how are you? You're very welcome.
Good, Ronan. Good to talk to you. It's a real pleasure to have this opportunity to talk with you today.
No, we're delighted to have you and thanks for making the time. I know you are a hedge fund manager and you've got a good macro perspective and a very good historical perspective on the whole monetary system. So I was going to first ask you about what your views are on what's happening now in the US, particularly financial system with extreme inflation, low real interest rates, but putting that into the context of the longer term structure of the monetary system since 1971, the post-Bretton Woods system. What is your feeling on what's going on right now? And are we at the end game play in this system, or can it just continue on the way it is?
Well, I think we're certainly at a moment of developed world sovereign debt crisis or issue, right? So inflation is now running north of 8% here in the United States, and policy rates are at 1%, and debt to GDP is over 100%. So all of this is unprecedented. And, we even now have very establishment institutions like the IMF, the managing director there, Gita Gopinath, warning about the onset of a developed market sovereign debt crisis. So I think whether it's here already or it's coming soon, I think that's the chief development that the post-Bretton Woods monetary architecture is going to have to deal with.
From a monetary reform perspective, do you think that in the current system, in the US particularly, there's appetite for reform, or whether it will be a nice to have sound money policy, but there isn't really political appetite for that?
So the short answer is there's not appetite. I mean, this is the one thing that Maxine Waters and Mitch McConnell really agree on is the importance of keeping the dollar as the world's reserve currency. So there's really bipartisan buy-in into that. So there is no appetite in DC to do anything to disrupt that or even tinker with that. I had proposed that to the Trump administration, that we accumulate gold as we were preserving the dollar as the world's reserve currency, on the idea that eventually we would face an issue, but there's not even appetite for, it seems like, any kind of pre-planning. The elite and the establishment in DC are very locked in on the idea of preserving the dollar as the world's reserve currency at all costs.
So from a theoretical perspective and from a practical perspective, I know you're an adherent and an advocate for sound money, and at the same time you work in Wall Street in a very large, well-known hedge fund. How do you navigate those two things? The fact that you theoretically would like a sound money system, but you have to day-to-day deal with the current system of the US dollar and the Federal Reserve.
Well, yeah, I certainly think the Fed is out of control. It's unaccountable. It's responsible for financing a government, certainly a federal government that's also out of control and unaccountable. And from a policy perspective, I'd very much like to see that changed. I think I bring to that process of change a fair amount of political realism and understanding the different actors and interests and involved in what might be reform of that system. And then from an investment management perspective, really my mandate is not to invest in the world as I would like it to be, but in the world as it is.
Yeah.
And that involves dealing with all the obvious messiness of the situation we're in from a macroeconomic and geopolitical perspective. But I think both of the two vantage points, if you will, come back to, at least in a lot of harmony, if not, complete accord in the idea that gold's going to remonetize. And whether America takes advantage of that remonetization and transitions from the dollar to a world in which we have more than one reserve currency and a world in which gold is remonetized, or whether we're disadvantaged in some way by that transition, that's more of a public policy question than an investment.
So when you see a bill like the Audit the Federal Reserve bill being teed up, I think it's called HR 24 and it was sponsored by Thomas Massey. Do you think that has a chance of going through? And if you were looking at it from the Fed's perspective, what would really be their comeback on why they don't need to be audited?
Yeah, so let's go to the substance. So you have a $9 trillion entity, so call that somewhere north of 40% of GDP, that is broadly accountable both to the American people and to our elected officials. So they can put $600 billion into the repo market in the fall of 2019 and really never provide an explanation for why they did that. That's not an institution or behavior that's compatible with limited government or democracy, I think, more generally, as I think it should be understood. So I think there needs to be more oversight, more accountability of the Federal Reserve, for sure. When we had in the first 2 years of the Trump administration a president that had campaigned aggressively against some of the Fed policies, we had Republican majorities both in the Senate and the House. We couldn't pass Audit the Fed. We couldn't pass the REINS Act. There's a lot of things we couldn't pass. And the reality is getting 60 votes in the Senate is very difficult. And the reality is not only are Democrats uniformly opposed to any tinkering with the Fed as it currently finances this very expansive government and welfare state, a number of Republicans also have little to no interest in actually tinkering with the Fed or the status quo in any way. And so I think that's just a political reality. To change that, I think, given the leadership that we have in the House, but more importantly, the leadership we have in the Senate, we really need a presidential candidate to run on this in some way as Trump did, but then to follow through substantively with appointments and regulation and legislation that would shed a more light on what the Fed's actually doing.
And do you think maybe coming into 2024, is there an increased likelihood that there could be such a candidate, or maybe in 2028?
There's a nice partisan division on this. If you watch Judy Shelton's confirmation hearings, where Republicans were broadly supportive, but not lockstep and not aggressive enough in their support for Judy Shelton, which would have been a Trump-nominated dissident to the Federal Reserve Board of Governors. And so it would have been 1 of 7 votes, certainly not a majority, but just a voice inside that wasn't going to work in lockstep with the rest of the Board of Governors. The Democrats came out swinging in a way that was really surprising, I think, if you watch those hearings, and how adverse they are to any real scrutiny of the Fed, and how fragile they believe the Fed is, in that it couldn't really withstand just one dissident on the Board of Governors. So that gives me hope that there's a real vulnerability there, there's a real fragility, there's a real opportunity to shine more light on the Fed's activities. I think that now has to actually be coupled with a political campaign and follow through to actually get that done.
Talking about the political appetite to audit the Fed, I know there are other bills that various Republican congresspersons have put in, such as the Audit the US Gold Reserves. If the Audit the Fed bill doesn't have much of a chance of going through, how much of a chance, if any, would an Audit the US Gold Reserves bill? I think it was teed up by Alex Mooney. So would you be in favor of Audit the US Gold Reserves, and do you think it has any chance of ever going through?
So I'm in favor of all of these pieces of legislation. Everything that shines a light on what the Fed's doing, what the Treasury's doing, how they're behaving. It would be great to know what the ESF is buying and selling, how big their balance sheet is, are they participating in the market. These would be great things to know. As to whether or not there are 60 votes for that in the Senate, I'm skeptical. But under the right set of political circumstances, I think there could be. I think it's going to have to take some leadership, and I think that leadership is likely to have to come from a president rather than the Senate.
BullionStar, for quite a long time, for a number of years, we've been trying to shine a light on the US gold reserves, looking at Fort Knox audit reports over the years, just really looking into the discrepancies in the New York Federal Reserve's vault. So we're always chipping away, but unfortunately we don't really get very far, and it's frustrating. And we at times put in FOIAs and we send emails to the US Mint, and eventually they get back with various answers that aren't really thorough and full. And in the near future, I'm going to be doing more reinvestigating the Fort Knox audit reports and so forth. Do you think that the US Treasury has as much gold as it claims to have? Because it hasn't really been physically audited by any third party since the 50s, if ever.
Yeah, why in the world you wouldn't audit it is beyond me. And obviously there's issues with respect to the reporting standards for sovereign held gold, so that sovereign entities, whether central banks or countries, can potentially double count the gold, and this seems to have been facilitated by the IMF, which is another problem. It's a little too much to believe that this is all just a coincidence. So it seems like it's very ripe for an audit and investigation. And really, you, Ronan, and Chris Powell are my two chief sources for when this story breaks. And so I'm ready. I'm enthusiastic that you're doing all the hard legwork to figure out exactly what's going on. I would say, in terms of participation in the gold market itself, we know from the statements of Alan Greenspan from the Fed minutes with Virgil Mattingly, their chief counsel back in the 1990s, with a note that Kevin Warsh wrote back to Chris Powell. We know that they're participating in the gold market. We know that they're participating in the derivative market for gold. So I don't think there's really any mystery as to whether or not they're participating. The question is how, to what extent, for what reason. These would be great questions to have answered. I just don't think they're about to answer those questions unless they really have to.
Do you think that gold is being used by government entities to help suppress the price or help put out fires in physical demand as one prong of gold price manipulation?
Well, I'll start with the conclusion, which is there central bank participation in the gold market 100%? Is the U.S. interested in having gold remonetized? The answer is no, and we can see that from a variety of different behaviors. They're not even interested in having Bitcoin remonetized in the first place. So I think both Treasury and the Fed are very averse to subjecting the dollar to any kind of competition, and I think they've made that abundantly clear in their public comments and also in their in how they behave. And this transcends party. This is in the Obama administration, the Bush administration, the Trump administration. It's really been, I think, pretty uniform in terms of the hostility that Treasury and the Fed have shown towards any kind of competition. But all central banks are not aligned in this. Well, we're seeing a number of central banks buying gold. And really, since 2008, we've seen massive accumulation on the part of central banks of gold globally. And this is not just Russia and China. It's Singapore, it's Thailand, it's Brazil, it's Hungary, it's Poland. There's a long, long, long list. So I think on balance, in the physical gold market, I think central banks and governments are in total probably a plus for that market. And I think we have now a number of central banks and countries preparing for the possibility that gold will be remonetized to some extent, which is why they're acquiring so much gold over the last now 14 years.
Yeah, and it would be very naive of the US to not be part of that. They have the best intelligence resources on the planet. They have the most sophisticated financial system on the planet. So even though the US political system wouldn't like any competitor to the US dollar, they presumably are doing scenario planning and have thought of the possibility of, if there were other regional blocs going ahead with remonetizing gold, that the US might have to do so. And if they had to do so, they'd have to have a plan, a contingency plan ready for that as well.
Yeah, this is exactly the pitch I made back in the Trump administration when I thought there was somebody there to hear it. If you look at what China's done, they've done this. Not only have they bought gold as a sovereign country, they've also facilitated the purchase of gold on the part of their citizens, and then made sure both of the gold that they're buying at the national level and at the individual level is held domestically in China. So we're not doing that. Obviously, we're not buying, I think, at a sovereign level. And then individually, to the extent that we are allowing the purchase of gold, which we do, a lot of that, all of the ETF gold, or almost all the ETF gold that Americans are buying, is held abroad. It's held in London.
Yeah.
So I think at the very least, coherent policy would start with the idea of having Americans hold their gold here domestically. And
as a way of encouraging gold ownership, it would be nice also if the US on a federal level made it, and on a state level, made it easier for people to hold gold. And I know that you have an interest in issues such as the circulation of gold and silver on a state level via legislation, and also the taxation of gold and silver on a state level. Are you involved in any initiatives to make that easier or to facilitate or educate states as to the benefits of having low or no taxes and passing legislation for gold and silver to be considered money?
So yes, I worked with American Principles Project and a number of other organizations, helping Utah in particular, but a number of other states, not only remove the taxation on gold and silver purchases, but also declare their gold legal tender within that state. This is more than a decade ago. The next step is what hasn't happened, and what really needs to happen is the state has to pick a fight with Treasury and assert that Treasury doesn't have the right to tax transactions in gold and silver in that respective state. And that hasn't happened for a variety of reasons. I think it's much more in the federal government's interest to preserve the status quo and the dollar as is, and that they are the entity that's the principal beneficiary of the ability of the Fed to print money, not states. So it makes sense to me that states would have more of a political ability to push back, but they haven't taken that next step. Hopefully that'll happen soon.
There's a parallel between the work that you're doing and the work that another guest of ours in BullionStar Perspectives is involved with, Stephen Gleason, who's involved with the Sound Money Defense League. And they have an interesting index called the Sound Money Index, where they rank each state by how gold and silver friendly they are in terms of having legislation on circulation and no taxes. So I think that states could learn from each other. If there's a few beacon states that have done Trojan work on getting rid of taxes, that other states could be convinced to follow suit, and that it could lead to a critical mass if enough of them follow the same template.
I agree. Easier said than done. There's a lot of inertia. If you look at how long it's taken, say, red state pension funds to come out in opposition to some of the most aggressive ESG policies of some of the money managers that they hire, it gives you a sense in terms of how much inertia and how slow moving, especially with respect to monetary matters and money, that a lot of these states are going to be. A lot of states don't see it as a state issue. They don't want to pick a fight with Treasury or the administration. They're dependent in many cases on the majority of their funding comes from the federal government directly in some way or another. So it's not the easiest sell to get these states to pick this. It's Article 1, Section 10, U.S. constitutional rights states have, but it's not that easy to get them to pick this fight with the federal government.
Talking about monetary reform and the Fed and the central entity of the Fed versus state level entities. I know that you were interested in advocating for the harmonization of treatment of gold and silver on a state level as regards money transmitters and so forth.
Yeah, 100%, but it's that's not really an issue in politics because you're talking about a very Byzantine set of both state and federal regulations that govern money transmittal licensing. And you have Treasury in particular that's been very aggressive with respect to the application of those laws against anybody trying to remonetize gold. So you had, this is now a little over a decade ago, but the Eagle guys, they actually were prosecuted criminally, and one of them went to jail for collusion to create a money transmitter without a proper license. And so that's the kind of enforcement action that just discourages, most people from going into this business. And the American, both Treasury and the Canadian Ontario Securities Exchange have made it abundantly clear to people looking at this business that they will face enormous regulatory compliance costs if they try to facilitate the use of gold.
So something like the REINS Act could help push back against the bureaucracy and allow more participants enter that sector. Would you be able to explain quickly what the REINS Act is? I didn't really know much about it until I looked it up recently, but it's a little bit hard to grasp, but when you grasp it, it actually would be a great improvement, allowing a more level playing field.
So the REINS is an acronym for Regulation from the Executive in Need of Scrutiny. And basically it's It's an attack on the bureaucracy, on the deep state, on this idea that we have people that nobody knows who they are, sitting somewhere in a government bureaucracy that are making rules that have a real effect on business and commerce here in the United States. And so the bound was to have an economic effect of $100 million or more. If an unelected bureaucrat was going to make that decision, Congress was going to have to review it. For Republicans, attacking the deep state, attacking runaway bureaucracy, you would think this was a no-brainer. When we had control of the Senate, we couldn't get the REINS Act brought up for a vote. So there's just a lot of opposition. This is just the nature of power. And I think part of thinking about monetary reform involves taking power seriously. And the REINS Act is a great example of this, where K Street and the Chamber of Commerce don't want the REINS Act. They're happy with the status quo. And even though Republicans are ostensibly for it, when push comes to shove, they're not actually for it. And when you go talk to voters, they don't know what the REINS Act is. It's not. It's its own kind of topic. That's the kind of issue that gets solved through a presidential campaign.
One thing I was going to ask you in terms of gold price manipulation was what your view is on the gold price discovery. From a BullionStar perspective, we've been doing a lot of research, and our conclusion, it may be wrong, is that the gold price is determined and established by massive unallocated trading in London over the counter, and also huge amounts of gold future trading on the COMEX. And that a lot of this has nothing to do with gold holdings or gold supply and demand. What's your view on the fundamental problem of the gold price? Is it a structural one in nature, as well as potential manipulation? Is the whole structure of the gold price misdefined? The fact that it's based on LBMA and COMEX pricing?
Well, I think we can say with quite a bit of certainty now that JP Morgan has paid a $920 million fine for manipulating the price of gold, amongst other metals, that there are issues in terms of price discovery. I think that is been resolved beyond a shadow of a doubt. I think the bigger question is the one you raised, is to what extent is the paper market and the derivative market for gold, to what extent has that muted the price signal that we get from the physical market?
Yeah, exactly.
I think that the paper market is multiples of the physical market. I think that's a problem. It's not clear to me which counterparties want to sell gold, paper gold, in these kind of quantities in this kind of monetary environment. It's not real intuitive why you would want to do that from a commercial perspective to me. So I think it'd be certainly great to know exactly who's doing that and why. But more broadly, I think, especially when it comes back to the central bank accumulation and government accumulation of gold, as well as the Asian purchase of gold, those are buyers that aren't buying paper gold, they're buying physical gold. And then increasingly with the sovereigns, not only are they buying physical gold, they're re-domiciling that gold in their own country because they understand that the real value of gold is it's the financial asset that's nobody else's liability. And then if you encumber that asset with a counterparty or keeping that overseas for whatever reason, you really undercut the principal reason why you should be buying gold in the first place. So I think eventually the physical market wins out. As to when exactly that happens, I'm ready. I'm optimistic, but it hasn't happened yet.
Well, there's an interesting theory that I came across on Chris Powell's website, GATA, where there's a hedge fund I think it's in New York, called Brodsky and Quaintance. They had a theory, they wrote a paper in 2012 where they claimed that the central banks were redistributing gold amongst themselves behind the scenes. And they ultimately do want a higher gold price, but they don't want it just yet because they hadn't finished distributing gold out amongst themselves. And I don't think they've any evidence to base that on, except maybe the fact that there are unusual gold flows between central banks at times. But it made me start thinking about that maybe some of these transfers where the IMF sold gold back in 2010, it was meant to be an off-market transaction, but they wouldn't say who the buyers were. And maybe some of these central bank gold sales back in the early 2000s were redistributing gold behind the scenes.
The central bankers that I don't know haven't called me to tell me what they're doing, so I can't tell you. I would say that if you look back at the way Britain sold its gold back in 1999 through those auctions that were designed to depress the price they received. Why Gordon Brown did that is, I think, still a little bit of a mystery. And then the nature of the way the Washington Agreement was entered into and then renewed, there was certain behavior amongst those 16 banks in terms of the way they handled the PR around the renewals of the Washington Agreement that were just, I think, with the benefit of hindsight, were very disingenuous. And so it's just not clear to me that central banks are in the business of truth telling, certainly not any kind of fulsome truth telling. That just doesn't seem to be the way they operate. They're much more, I think, attuned to perception management. And I think that applies to, monetary policies. We think of it when it comes to interest rates and inflation. And I think that applies to their participation in the gold market. So I'm not holding my breath for their review of exactly how they want to manage all of this.
Yeah, from my exposure and experiences looking at gold and silver for the last 7 or 8 years, it's pretty easy to come to the conclusion that they're monetary metals and very strategic metals. But I was going to ask you, given that, and given that you probably also agree that they're both monetary metals, your funds and your strategies have a focus. They have holdings related to gold and silver miners and so forth. Is that part of the strategy, or is that just an outcome of the fundamental analysis that led your funds to have those exposures?
So gold miners, and this is quite apart from any of the discussions we've been having about gold's monetary character and central banking. Gold miners themselves are a really interesting bunch of companies that are in the aggregate undervalued. It's a very heterogeneous set of companies where I think you can add a lot of value through company-specific analysis. We've done that for 20 plus years, and I think we can add real value stock picking in that space. Certainly part of the thesis that we have with respect to both gold and silver mining is that gold and silver prices will be higher in the future. And part of that is the irresponsible central bank behavior we see, chiefly here in the United States in terms of the loose monetary policy. We're going to go through a real test. I think this summer we're going to go into the beginning of quantitative tightening and to see if the Fed has really any appetite for that. I suspect not too much, but we'll see here as the year evolves. But I think as there's more stress in financial markets, as there's more stress in the financial architecture, as there's more questions raised about the sustainability of the sovereign debt levels in the developed world, and particularly in the United States, and you couple that with very loose monetary policy, that all seems to me to be a recipe for some remonetization of gold. And you don't really need everybody that has a dollar, obviously, decide that the dollar is no good, they want it in gold. What you need is 1% or half of 1% of people that are holding dollars decide that gold might be a reasonable hedge. And that alone would obviously move gold prices and silver prices much higher. And so that's really the thesis that we're working on. And
do your funds take a decision that the best way for exposure to the gold and silver markets is through gold mining equities? Or if it's on the public record, do your funds have any positions in physical gold or in gold trusts or anything like that?
So we own almost exclusively gold mining companies in the gold and silver space. That's really where the value is. You can buy companies that some of which have almost half their market cap in cash. They have very pristine balance sheets, good reinvestment opportunities, in some cases very well-aligned insiders, trading on cash flow multiples in the mid-single digits at today's prices. So there's some really attractive company-specific investment opportunities, and that's really where almost all of our capital is focused in the gold and silver mining space. We are investors in gold money, which is not a miner. It's a transaction facilitator as well as storage facility for gold, but that would be the one exception. And there we're talking about a very tiny fraction of our assets, so kind of maybe 1%.
Okay, interesting. I know that Equinox is one of the founders or one of the members of an entity called the Shareholders Gold Council, which was created a few years ago, and I think it was initiated by Paulson and Co. So there are quite a few hedge funds on Wall Street that have an interest in the gold and silver space. yourselves and Paulson and a few others. When you come across your contemporaries, obviously you know other hedge fund managers, is there a strong appetite or a strong view that now is the beginning of a potential golden era for gold and silver mining stocks?
Well, we're a minority, and I think if you look at the list of money managers involved in the Gold Shareholders Council, it's a relatively short list, right? We're not talking about hundreds of managers. We're talking about here
10, 15, maybe.
Yeah, 10 or 15. So, and I think even amongst that group, and certainly when you talk to the executives in the industry, what's going on in the gold market, central bank participation, monetary policy, potential manipulation of the gold market, this is not really where the discussion is being had about those issues. Really, when you're talking about companies and investors, we're really dealing with a totally different range of whether it's geology or social license or licensing and financing. It's all of the issues involved in operating those mines. And I think, generally speaking, the investors in that space, much more so than the directors and executives, are bullish on gold and silver. But within the companies themselves, it's a real, it's a little bit of a hodgepodge. A lot of the people are much more technical than they are interested in macroeconomics, and technical in terms of their background would be in geology or mine engineering. And they're not really particularly committed to a strong view on what's going on in the gold market or where the gold price is.
Yeah, I guess what they look at it from their perspective, they're creating a product or they're refining a product, and they're looking at what they can sell it for, and then they're looking at what their capital expenditure has to be. So they put in expenditure and financing based on what they think they can generate, and it's like a production line maybe in some ways, and they're so busy looking at that from a very near-term focus that they don't really have the perspective to look at it from a big picture monetary perspective.
Yeah, and it's also not what investors want, right? When I, show up and meeting the executive of a mining company, I want to know, how's the mine operating? Did you get your permits? Are you able to make these investments? Where's the free cash flow? How's your social license operate? What are you going to do with respect to share buyback or the deployment of incremental free cash flow? His opinion about exactly what's going on over at the Fed is not really the conversation I'm looking to have.
Yeah, it was something similar when we were interviewing Keith Niermeyer back in January of First Majestic. He said the same thing, that he finds it difficult when he's to convince his contemporaries in the gold mining space about his views. I wanted to ask you about your activities in the philanthropy space. You're very active in philanthropy, and you've been on quite a few different boards, spanning everything from politics and economic reform, sound money, to more societal and cultural areas. Can you tell me how your sound money perspective influences your activities in the philanthropy space?
Well, I think maybe it's been more the reverse, where I've seen through some of my participation in nonprofits and C4s and super PACs, I've gotten a much better, I think, view of what's going on in Washington, maybe than many other people in my position. I think that certainly helped inform my investment decisions and give me a sense in terms of what's possible, what's not possible, and why, and what the sticking points are. I think more broadly, I think it's no surprise that some of the same people that are interested in sound money are interested in sound families and kind of more conventional jurisprudence. And so a lot of those things seem to come together and really form a whole, which is why you see exactly the kind of vision I was talking about earlier when it came to Audit the Fed or anything like that, is that just divides very neatly on party lines, right? So every single Democrat opposes that, and almost every single Republican supports, right? So, and the same thing is true with a lot of the other cultural issues or philanthropic issues that I'm involved.
So it's been great talking to you, Sean, and I really look at you as one of those legendary figures out there ploughing a path on behalf of gold and silver investors in Wall Street. And if there's anything that I can do in my research to help, I'll certainly try and do some more investigation of the US entities and, and how they might be involved in the gold market.
Ronan, it's been a real pleasure. As like I said, you and Chris Powell are the two leading experts in what's actually going on out there. So I really value all the work that you're doing.
Thank you very much, Sean. Thanks.
Thanks.